Hello and welcome back to Money Never Sleeps. My name is Bob Cruces from M&A Wealth. If you'd like more information about what you hear during the show, give us a call at 866-973-3627 or visit us online at mnawealth.com. And while at my website, click on the page to check out past shows and subscribe on Apple Podcasts or Spotify. During the show today, we're going to break the bill down a bit with the goal of giving you a better understanding of what it may mean for you today and in the future. A recent NerdWallet article, What the Big Beautiful Bill Means for Your Finances, does an excellent job breaking the bill down. Let's break this down. According to the Congressional Budget Office, this bill is set to pile on about $3.3 trillion to the national debt over the next decade. Now that's not just a number on paper, it's a ripple effect that could touch just about every household in America. Buried in the hundreds of budget line items are real changes that may hit your wallet, your taxes, and your future plans. So let's talk about what's in the bill and how it could shape the financial landscape for you as well as the economy at large. Let's first consider how the budget bill will likely reduce the federal government's revenue. With regard to taxes, the biggest ticket item in this new budget is the permanent extension of the 2017 tax cuts. Those cuts were set to expire, but now they're here to stay. And according to the Congressional Budget Office, they come with a hefty price tag that's by far the most expensive move in the entire package. First, let's highlight who could benefit. The wealthiest households could pocket more than $12,000 a year. Middle-income families might see $500 to $1,000 back in their pockets annually. But for the lowest earners, it's actually a loss of about $1,500 a year. In total, there are nearly 70 tax-related changes baked into this budget. For me, some of the most attention-grabbing include a bump in the standard deduction, $750 more for individuals, $1,500 for couples, starting in 2025. Here's another new twist. A deduction for seniors of up to $6,000 for tax years 2025 to 2028. A permanent boost to the alternative minimum tax exemption, an increase in the child tax credit to $2,200 in 2026, bigger estate and gift tax exemptions, and some headline generators like no taxes on tips or overtime pay from 2025 to 2028. Even interest on new auto loans up to $10,000 is excluded during that period, although it's limited to vehicles assembled in the United States. Altogether, these changes would cut government revenue by trillions over the next decade. So, while some families will feel relief, others may be left wondering where they fit in and how these moves shape their bigger picture. Let's look at where the government's planning to bring some revenue back in. First up, the SALT deduction cap. It's going up to $40,000 from 2025 to 2028. That's a big jump from the $10,000 limit we've had, and if Congress didn't act, it would have expired completely, letting taxpayers deduct unlimited state and local taxes. So yes, this change actually raises revenue nearly $950 billion over time. On the clean energy front, things are shifting. That residential clean energy tax credit is gone after 2025, so if you're thinking about rooftop solar or geothermal, now might be the time. Ending that credit adds another $77 billion to the pot. And here's another curveball. The bill introduces Trump accounts, which are investment accounts for kids that parents can contribute to. The government throws in $1,000 to get it started. Total price tag is $15 billion. Finally, the budget closes a tariff loophole that's let small packages dodge taxes, meaning some online orders from abroad may get pricier. Put it all together, and the tax changes in this bill total $4.5 trillion in cuts over the next decade. Big moves, big numbers, and big implications for families, investors, and everyday Americans. The article also provides a recap of what the legislation may mean for social safety nets. To help offset the bill's massive price tag, Republicans have included about $930 billion in cuts to social programs over the next decade, according to the article. That means big changes for Medicaid, Medicare, and the Affordable Care Act, programs that cover more than 100 million Americans combined. One of the biggest drivers is new Medicaid work requirements. If you're a childless adult or a parent with kids who are 15 or older, you'll need to prove you worked, volunteered, or went to school at least 80 hours the previous month to qualify. And eligibility checks are getting stricter because states now must verify eligibility every 6 months. The potential result, according to the Congressional Budget Office, is that nearly 12 million more people could be uninsured by 2034. And if more cuts hit the Affordable Care Act, that number could climb even higher, the article adds. The bill also tightens food assistance rules under SNAP by expanding work requirements and shifting more of the cost burden to states. Ultimately, if you or people you care about rely on these programs, this isn't background noise, it's something that may hit home. Let's next examine what the budget bill may mean for consumer protections. There are some changes in this budget that may be of special note, especially if you've got student loans or care about consumer protections. First up, the Consumer Financial Protection Bureau, the government watchdog that's clawed back more than $21 billion for consumers, just had its budget cut in half. The article explains that it could mean fewer investigations, fewer refunds, and less protection where it matters most. And for federal student loan borrowers, things are shifting fast. This bill scraps the current repayment plans, stretches out the forgiveness timeline, and ends funding for Graduate Plus loans. It even sets lifetime borrowing limits for grad students, so if you were counting on federal aid to finish that degree, the road just got steeper. Finally, according to the article, the Tax Foundation projects it could give the economy a short-term jolt, mainly by encouraging business investment through big tax cuts. But that boost comes with a $3 trillion price tag added to our already staggering $36 trillion national debt. Now, where's the money going? The biggest chunk is tax changes, followed by $1 trillion earmarked for defense, border security, and immigration enforcement, including $45 billion for the border wall and another $45 billion for detention facilities. But not everything's getting fundies. The article explains that the bill rolls back key clean energy incentives, which some experts say could raise energy costs for consumers, slow down clean energy development, and even lead to job losses, while emissions may go back up. And finally, here's one thing that keeps the lights on. The bill raises the debt ceiling by $5 trillion. That move keeps the US from defaulting on its bills this summer, which could have sent shockwaves through the economy. Love it or hate it, this budget isn't just about numbers, it's about priorities, trade-offs, and what kind of future the country is headed toward. If you have any questions about your retirement magic number, your retirement strategy, or any other parts of your financial strategy, visit my website at mnawealth.com or call my office at 866-973-3627 to discuss how my team might be able to answer your questions and address your concerns. It's our goal to help you prepare for the retirement you've worked so hard for.
Disclosure: all matters discussed during the show are for informational purposes only. Opinions expressed are solely those of M&A Wealth and staff. All topics covered are believed to be from reliable sources. However, M&A Wealth makes no representations as to its accuracy or completeness. This commercial shall in no way be construed as a solicitation to sell securities or advisory services to residents where permitted. Topics should be discussed with your individual advisor prior to implementation. Advisory services offered through M&A Wealth, a registered investment advisor in the state of Texas. Insurance products and services are offered through PNC Life Insurance Agency, an affiliated company. M&A Wealth and PNC Life Insurance Agency are not affiliated with or endorsed by the Social Security Administration or any government agency.